Hey there, Sandra Edmond, Queen of Tax Deeds with your Tip Tuesday. This tip I'm giving you today has to do with how do you bid, how do you figure out the bid when you are bidding at the tax deed sale, okay? So come with me and I will show you real quickly how do you do that. So let's kind of walk into the sales site right now. So let's go to, I'm on the County Links page on my website, queenoftaxdeeds.com. Go to County Links and I'm going to hit CMT for Comptroller. And you guys have seen me do this before. We go to tax deed sales. So from here, you have the option of going directly to the auction website. Let me hit back actually for a second. Let's duplicate. So we can go directly to the auction site here. The other thing you can do here is just scroll all the way down and hit accept, and that takes you to Orange County's tax deed sale site. So then we hit active sale, and let's pick something coming up December 5th. Active sale, we're going to hit search. So right here, I've got these sorted through certificate numbers ascending. And on the minimum bid, over here on the right is what the minimum you have to put in. That's self-explanatory. So let's go for a higher minimum bid like this $14,000 one. So you have two options. You have a couple of options. You can copy the parcel ID number from here and then you go to the property appraiser's website, right? And then put it in over here. Or you can go directly from the sales site, and we're going to do December 5th, right? So we're going to go to, I already know it's on the third page, this one. There it is. 2017-7231. Okay, so you saw we went directly to the property appraiser's website, pulled it up, or we can go from the sales site and do it this way. The other option is we can come over here under other documents or view property information. They actually have a scanned copy of the property appraiser's printout of this property. So let me show you what that looks like. Yeah, here it is. So we can see here, it's just a scanned copy. It's black and white. It's not really the best image. So it's actually much better if we just view it directly from the property appraiser's website. So this is the property, Blue Tick Drive, right? So we see here the assessed value for 2019 is $175,000. So the assessed value is not market value. Okay, if we want to figure out market value, we want to first figure out what the feature of this property is. How many bedrooms and bath, your build, square footage, what type of construction. This is a 4.2. So let's say Orange County is really good. See, they got a 4.2 here that's sold. We're looking for properties that have sold. So these are sales. It doesn't matter what's for sale, what is sold. So let's say we've analyzed the neighborhood and this is what we came up with. $250,000 is the price of how much this house would sell for if it was fixed up. $250,000. So let's go ahead and whip out our calculator and let me show you the formula we are going to use. Or should I just show you the formula first? Let me show you the formula first. That might make it easier. So we're going to use what investors call the MAO, maximum allowable offer, or what I call maximum allowable bid, MAB. So that formula says you take the ARV times 0.70 minus the repairs, and that gives you the max you should pay. It's called maximum allowable offer. So ARV times 0.70 minus the repairs gives us the max. So you can do this number here can be anywhere between 60 and 80%. So you see that we start with our retail price and we multiply it by anywhere between 60 and 80%. We subtract the repairs. So that gives us the most that we should pay. Let's do an example. So if it's a $100,000 house and we're using the 70% number, minus the repairs of 10,000, we'll just say 10,000, then you would need at least 60,000 is the most an investor would want to pay. So if you are going to be buying it for less than 60,000, you have some room to make money. Okay. All right. So you can use anywhere between 60 and 80% as your number. Okay. So I like to use a range. So let's say the house was between 100 and 110,000 in value. Then I would do the 70% number of both, and that gives me between 70 and 77,000. Because remember, actually, we didn't take out the repairs. We take out the repairs times 0.70 gives us 70 minus 10,000. I did not take out the repairs, so this should be 60, right? 60K minus, so let's do 110, right? 110 times 0.70 equals, and then we minus the 10,000. Is that 10,000? Yes, 3 zeros. That gives us 67,000. Okay, so it's anywhere between 60 and 67,000 is the max we would want to pay. Okay, if that's our range, right? Okay, so let's go back to our example here for this property. We said it was 250,000. 250 times, let's do 0.70. That gives us 175,000. And let's say we think it needs like 30,000 in work. That gives us 145,000 for our 70% number. Now let's say we want to be really careful and do a 60% number, right? Times 0.60 minus 30 gives us 120,000. 120,000 would be your 60%, and 145,000 would be your 70%. Now, if you're afraid that you'll probably get outbid and you really, really love this property, then you'd start with 250,000 times 0.80. That's if you're a landlord and you just plan on renting it out, right? You don't plan on turning around and reselling it. You could afford to pay a little more. That gives us 170,000. So right now, I'm just playing around here. We've got anywhere between 120 and 145 if we're doing a 60 to 70% number. So if you know that the most you're willing to pay for it is 145,000, what is 5% of that number? Times 0.05. Why do we say 5%? Because the county or the state of Florida wants at least a 5% minimum deposit. So that means you're going to need at least 7,000. What did I just do? Let's see, 145, sorry, my cursor hit it, times 0.05, right? That's where we're at. I hope that was 145 I just put in there. That gives us 7,250. And always do not be afraid to check your math, right? It's going to be an ugly day if you went and did your math incorrectly and you had 6,000 something instead of 7,000 as your maximum number and you don't have enough money to buy it and somebody gets it, right? So anyway, that gives you 7,250. So that's how you come up with your number. So you know you're going to need at least $7,300 sitting at the auction. So they have instructions on how do you make your deposit, whether it's a live auction or it's an in-person auction where you actually have to show up and drive over there and put your bids in. So you just have to make sure you leave enough time to get your money in there, and then you should be able to bid to up to 145,000. Okay, so that's how you come up with your bid amount, and it's all based on the market, how much the properties have sold for in that area. Okay, we want to compare apples to apples. We're looking for other properties that are similar to this one. What have they sold for? Okay, and make sure you have a good idea of how much work it's going to need. How do you come up with the repair costs? Have a general contractor or somebody show you how to come up with repair costs. On the field trip, we do go over how to come up with repair costs, the big items to look at that'll really get you in trouble if you're not paying attention. And then I also go over how to do your due diligence, how to make sure that you've checked the title, make sure you're going to be able to get marketable title later on the property, and how to come up with your numbers really quick. So these are just ways to come up with the cash offer price if you're buying it at the auction. Now, if you are contacting the homeowner before the sale, you can always make them an offer then too. So if you are able to reach the homeowner before the sale, that is very, very good. And they do want to sell, you see how much they want to sell it for. So depending on how far out the auction is, I might have like a fire sale price. Like, okay, if it's like the auction is in a week, then I'm offering the lowest amount so I don't end up getting hurt, because now you got to do all of your due diligence really quickly and close fast on the property. So the closer I am to the auction, the lower my price is. So depending on how far out you can get in touch with them, the better the offer that you can make. So it depends on their situation and circumstance too. There's a really good book called, what's it called? Never Split the Difference. One of my students, actually, here it is, Split the Difference, turned me on to this book. It's really, 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 really good. And it's by a former FBI negotiator, Chris Voss. There it is, on negotiating. So, Never Split the Difference. That's a really good book. If you're looking for a book to read or listen to. I have Audibles. All right, so I hope I've been able to answer the questions that you might have on coming up with your bid prices. And if you have any other questions or you just want to learn some more knowledge, I have a website, queenoftaxdeeds.com, with plenty of information. Also, you'll find me on Instagram, Facebook, and YouTube with the same name, Queen of Tax Deeds. All right, so let me know if you have any other topics that you want me to address on any videos, and I sure will do my best to do so. Have a great rest of your day,